Silver's at 90, but the U.S. Mint is quietly charging over $170 for a coin. Why? The government just tipped its hand about the true value of silver. This isn't a glitch. This is a sign that something massive is happening in the market, and it could change everything about the way you think about money. Stay with me to see why this is bigger than you think. The U.S. Mint just did something that no one saw coming. For the last 72 hours, investors have been glued to the screen, watching silver prices bounce around $90, nervously wondering if the bull market is over. But while the public was distracted, the Mint was working in the background, quietly updating its pricing. What they did next should raise alarms for anyone paying attention. Why would the government, already refusing to sell coins because of a backlog, suddenly double the price of silver in their system? The answer is simple. They know what's coming. They know the reality the rest of us haven't fully grasped yet. They're not just adjusting prices, they're setting the stage for something far bigger. And this price hike isn't just a small detail. It's a huge signal about what's really happening in the silver market. But what does this all mean for you? Here's the claim. The U.S. Mint just revealed a price of $173 for a silver coin that's selling for $90 on the market. And that's not just a random number. This is a deliberate move. The Mint isn't just selling coins, they're revealing the real value of silver. This isn't about retail buyers or casual investors. This is a clear message from the government itself. The Mint's decision to price silver at nearly double the market value shows that the paper price is a total illusion. That $90 price you see on the screen, it's irrelevant. The true price of silver is much higher, and the Mint just confirmed it. They're not going to sell silver at a loss, so they're setting a price that reflects the reality of what silver is worth, an asset that's in short supply, even if the screen says otherwise. But here's the twist. This disconnect is bigger than just silver. This is about a system that's broken, and this gap between the paper price and the physical price is a ticking time bomb. If you're a retail investor, this is your wake-up call. Are you really going to sell your silver for $90 when the government itself is saying it's worth $170? Now, things are about to get much more intense. This isn't just an isolated price adjustment. It's a part of something much bigger. What the Mint just did is no different than a warning shot across the bow of the entire financial system. The price discrepancy between the paper and physical markets is spiraling out of control, and that's creating one hell of a pressure cooker. Remember the last time the paper market tried to smash silver prices? The banks pushed silver down to $86, but it didn't stick. The market rejected it. By the end of the week, silver closed above $90, marking a historic high. So what did the Mint do? They raised their price to $173, almost as if they knew what was coming next. This isn't a coincidence. The Mint is making a bet. They're aligning themselves with the inflation trade, signaling that the purchasing power of the dollar has crumbled. But here's the kicker. When a market starts to break like this, it's a game changer. It's no longer just about price volatility. It's about the very foundation of the system itself coming apart. And when that happens, the rules of the game are rewritten. This is where it gets real and dangerous. But here's where the story gets even darker. The Mint's price hike wasn't just an announcement. It was the first sign of a much deeper problem. The paper market, which traders use to speculate on silver, is in complete denial of reality. The banks and the powers that be have been desperately trying to suppress silver prices, but it's only making things worse. And now we have undeniable proof. While the Mint was quietly adjusting its pricing, the commercial vaults were being drained. In one of the largest single-day withdrawals in history, over 4 million ounces of silver vanished from the COMEX vaults. That's over 130 metric tons. This wasn't just a few coins being moved around. This was a systemic heist orchestrated by the very players who have been controlling the paper market. And this wasn't some random act. It was carefully timed. The price of silver dropped just before the raid, giving the banks the perfect cover to loot the vaults at a discount. This isn't just manipulation, it's a collapse in real time. And the scariest part? The metal isn't just disappearing from the vaults, it's going into private hands, off the market for good. The banks, the insiders, and the players who know what's really happening are pulling silver out of the system, and they're doing it fast. Now let's take a step back and think about you, the viewer. What does all of this mean for you, and how does it impact your real-world finances? Imagine this. You're holding silver, thinking it's a safe asset, but the government and the biggest players in the market are all positioning themselves for a crisis. The vaults are draining, the banks are pulling metal off the market, and the mint is raising prices. If you're a retail investor, this isn't just a story about charts or market manipulation. It's about the money in your pocket. If you've been holding silver, the question is, are you really going to sell at $90 per ounce when the mint itself is pricing it at $173? Think about the psychology behind that. Retail investors are no longer selling their silver at rock bottom prices. Instead, they're holding tight, waiting for the price to reflect what the mint and the insiders already know. Silver's value is much higher than anyone's willing to admit. But here's the crucial part. This behavior, this decision to hold, is breaking the short sellers. The banks, the ones who need people to sell so they can cover their positions, are in a panic. They need silver at a low price to protect themselves. And what's happening? Retail investors are digging in their heels, refusing to sell. They've become the ultimate holders, the diamond hands of silver. If this continues, the system as we know it could implode. The banks will be left with nowhere to turn, and you, the retail investor, will be sitting on the assets that have true value. But here's the unsettling truth. What we're seeing isn't just a battle between the banks and retail investors. It's a fight against the system itself. Behind all of this, there's a deeper force at play, something that makes this entire scenario even more dangerous. This isn't just about silver. It's about the broader system that allows these kinds of distortions to happen in the first place. The Mint's decision to price silver at 173 isn't a random move. It's a calculated admission of a much bigger problem. There's a broken mechanism behind this chaos: fear, leverage, and manipulation. The paper market is running on fumes. The banks and the system depend on a false narrative that silver is worth $90, but the physical market is saying something entirely different. This disconnect is the product of a system that's built on fake promises, promises that are starting to crumble. What's really happening here is a financial game of whack-a-mole, where the banks are trying to patch up one hole after another while the system continues to leak. But they're running out of places to hide. As the mint adjusts its prices, as the vaults empty out, and as retail investors hold tighter, the system is nearing its breaking point. The real question is, how long can this facade last before the entire structure collapses? The situation is now at a crossroads. Two paths lie ahead, and both carry massive implications. The first scenario, the banks managed to push back the wave of reality, stabilizing the paper market long enough to avoid a full-blown collapse. But that's a temporary fix, and it's already becoming clear that the system is unsustainable. The price of silver may dip again, but the gap between the paper price and the physical price will continue to widen. Eventually, the system will break under its own weight. The second scenario, the paper price of silver catches up with the physical price. The Mint's move to $173 is only the beginning. As more physical silver leaves the vaults and more investors hold tight, the paper market will have no choice but to adjust. The price of silver will surge, and when it does, it will send shockwaves across the entire financial system. But here's the catch. No one knows exactly when this will happen. What we do know is that the momentum is building. The forces driving this are too powerful to ignore, and the next move is already in motion. The question is, will the paper market adjust before it's too late? Or will we see a catastrophic revaluation that shifts the entire landscape of finance? The bottom line? The game is already over. The United States Mint just tipped its hand, revealing that silver is worth $173, not $90. The vaults are emptying, the banks are scrambling, and the retail swarm is unstoppable. This massive discrepancy between the paper price and the real price of silver cannot last forever. The system is teetering on the edge, and it's only a matter of time before the truth comes out. What's your move? You can keep playing the paper game, hoping that the system will somehow hold up. Or you can recognize what's happening in real time and make a decision that could change everything. If you're holding silver, don't sell it at a discount. Hold your ground. If you're buying, focus on the physical market, because the paper market is a ticking time bomb. The only way out of this mess is upward, and the moment of repricing is approaching fast. So here's what I want you to do. Stay ahead of the curve. Pay attention to the Mint's actions, watch the vaults, and don't let the noise distract you from what's really going on. This is more than just silver. It's the financial system unraveling before our eyes, and you've just seen it for what it is. Stay informed. The next chapter is already unfolding.